Hello, everyone. Happy Tuesday and welcome to our live stream. We are here with someone that I consider a partner in our business, someone who is an integral part of how we get our offers accepted fast, how I am able to buy properties with less money than you think, right? This is our secret weapon. So we have Tyler Rivers here with Kiavi. They are our personal hard money lender that I have been using, I would say almost exclusively, except a couple random situations, for the last 2 years. We're going to talk all about their process, how you can get the best terms with Kiavi, what those terms are, how you can get your offers accepted quickly. We have a lot to get through. So let me go ahead and turn it over. Tyler, if you want to introduce yourself, who you are, how long you've been here, all that business.
For sure. Yeah. So once again, I'm Tyler Rivers, one of the customer experience managers with Kiavi. So I work exclusively with our standard borrowers or new investors, however you want to classify it. It's any individual who has less than 5 exits in the last 24 months. I've been with Kiavi now for 3.5 years. Before at the end of June, started as an SDR with the company, and after a year was promoted to the customer experience manager. So I'm kind of also known as an account manager when it comes to my position. You'll probably hear my 2-year-old yelling outside at one point or another, so don't mind that. That's his new thing, is just to yell.
I'm with him. Sometimes you just got to yell.
Yeah, right. That's the excitement at the house, the 2-year-old running around during calls and everything else. A little bit about myself. I was born and raised in Pennsylvania, Central PA, Williamsport, PA. Some of you may have heard of that with the Little League World Series. Have lived in Pittsburgh for going on be 4 years in April.
Nice.
So that's where our one office location is located in, Center City, Pittsburgh. We also have another location out in San Francisco. And as I said before, I also have a 2-year-old, married to my wife for just over 3 years now.
Oh, congrats.
Thank you. That's a little bit about myself here.
Yeah, very cool. So 3.5 years at Kiavi. In our day and age, 3.5 years at any job it's kind of a long time. So
yeah.
Tell us a little bit about like Kiavi history, how you guys got to where you are today, and really how you help your customers.
For sure. So Kiavi's been around. We celebrated our 10-year anniversary. It was last year. So since 2013. We've now done over, I think the number is like 65,000 projects across our bridge platform.
Half of those were mine.
Yeah, right. So a lot of experience. We're very data driven, tech savvy. Our founder was very tech oriented. So we really pride ourselves on the process and how you guys get signed up, create your account, and get everything right online without even talking to someone. Obviously, you're eventually assigned to a representative here, but we give you the tools to kind of do it yourself too.
What I love is that if I need to talk to a person, someone is there. But if I don't want to talk to a person, I can do it all online. So you kind of get the best of both worlds.
Yeah, quite. I have some customers I deal with. We rarely talk on the phone. They submit a loan, submit their whole application, shoot them an email saying it's into processing. The next time I'm talking to you is when we get valuation. Then the next time I'm talking to you is when we're clear to close.
Yep. So we're going to go over the process overall. First, tell us, what is hard money? The audience, just the short version.
Yeah. So short version, it's, quicker financing, no doc, low doc loan is what we like to call it. We're only looking at a credit score. So we're not doing any kind of income verification, cash reserve verification. We have no minimum liquidity requirement that you have to meet. Obviously, you have your down payment and, holding costs, et cetera. But it's quicker access to financing, and really all that you're supplying to us is a purchase contract, a scope of work, and your entity documentation, and we're good to go.
Yep. So when we say lender, are you a bank? Is that the technical term?
To a point, we're a private company.
Okay.
We obviously have investors. We, have done a lot of securitizations over the past couple of years. I think we just announced, I want to say it was a $300 million securitization a couple weeks ago. We had a couple last year as well. As you know, with the market being so tight, those are tough to come by right now. And Kiavi's still getting them. So we're,
Well,
we
good.
are the leading lender in the hard money fix and flip space.
So the way that I describe a hard money lender is basically short-term, high interest compared to what you would get with a more traditional lender, right?
For sure.
So we'll go over terms kind of towards the end, but essentially the loans I'm getting right now with our, my position, I'm paying around 10.5 to 11% for up to 12 months.
Yep.
Now, what does that allow me to do as an investor? It allows me to close incredibly quick, right? How long are we saying a Kiavi loan takes to close these days?
Typically 2 to 3 weeks.
2 to 3 weeks, right? Versus potentially 4 to 6 weeks with a traditional lender. And I'm not going to overpromise on your behalf, you guys, but I've seen it much faster than that. So I think
we can make it happen.
Yeah.
If all the pieces fall in place, we can do it.
I think we just closed one a couple weeks ago in 7 days.
Yep.
With Kiavi. So the secret to getting my low price offers accepted is that I can close in 7 days. Don't overpromise it with Kiavi, but I can
2
close
weeks.
In 7 days.
Let's stick to 2 weeks, and we can try to make it happen quicker for sure. Especially from our perspective, as far as processing goes, after your first deal, things do get easier.
Yes.
Because all the underwriting's already, then mainly that extra couple of days in there is around your entity documentation. And we want to make sure everything makes sense and matches up with, how everything is formed. So once we have all that information, that just kind of carries over to your new loans, so where we don't have to re-underwrite your entity documentation.
Exactly right.
It's really just all third-party stuff that we have to wait on.
Yep. And if you have third party is your title company and your insurance agent. So if you have strong relationships with those folks and they know the Kiavi process, both of those parties, third parties for us, know the Kiavi process in and out. So as soon as they get that automated email for a deal, they know what to do, right? So that's how we're able to do it so fast. But I want to show you the power. It's yes, I may be paying 11, maybe if you're a new borrower, even 12, 13%, but I can close on a deal in 2 weeks where the other buyers may not have that power. Yep. So I'm getting offers accepted that other buyers don't, if you need a traditional lender, you're not getting your offer accepted. But sellers don't want to see that today.
Mm-hmm. Another thing I always like to mention too, when, high interest rates can be intimidating. You're paying 11.99% on a 12-month loan. The good thing about the bridge loan is it is interest only. So you're obviously not paying any principal down. That's just due at payoff when you go to sell the property.
Yep.
There's also no prepayment penalty on these loans either. So if you're trying to, if you're able to get your rehab done in 2 months, you sell it in 4 months, you only have 3 interest payments that you're making, and then you're paid off at that point.
Yep.
So really your holding costs can be really minimal when it comes to a 12% interest rate, because you can pay it off at really any time. Just depends how quick you can move.
A lot of the investor world is all about speed. So Kiavi is our financial partner who allows us to move quickly. So let's talk about let's talk about the difference between standard and pro borrower real quick. So I'm on the pro plan. I love Tyler to death. I'll be honest, he's actually not my rep. So I work with Pat, who I've been with for years, but Tyler works with the standard borrowers, meaning fewer than 5 exits in the last 2 years. So what is an exit?
Yep. So an exit is either a sale of a property or a refinance of a property, going from short-term financing or maybe a purchase of property in cash to a long-term loan, whether that be, 5-year, 10-year, 15-year, or 30-year, that can be considered an exit. So it's as long as you're refinancing the property into a long-term or just selling a flip would be considered an exit with us.
In my understanding, when I first onboarded with you guys was you needed to own 5 have title for 30 days or more.
Yep.
5 times in the last 2 years.
Correct.
That's still
one extra caveat there is you can't own that property for more than 3 years prior to that exit. So if you purchased a property 5 years ago and you refinanced it a couple months ago, that wouldn't be counted as an exit because the whole time was too long per our policy.
Okay. So if you don't have that and you're not a pro borrower yet, no problem. Kiavi still has plenty of options for you. Once you do hit that, then you can move up to the pro borrower and your terms and your process get a little bit better. So I do want to go through the process, and let's go through. We'll start with the standard, and then if there's something that's different or more of a benefit to a pro borrower, we'll just call that out.
Yeah, for sure. So yeah, I mean, as far as our standard process goes, initially it's, creating your account and then getting pre-qualified. All right. And really all that entails is you just putting in a property address, entering the name of your entity, as well as the individual guarantor, and then doing a soft pull on your credit. So we're only pulling from one bureau, and that's your Equifax report. We need a minimum 660 credit score to qualify. As long as you got a 660, you'll be good to go. From there, obviously, you'll put your offer out. Hopefully you get it accepted. At that point is when you'll log back into the platform. You'll submit that initial application for review, and then a checklist will populate for you, which is where we'll need the purchase contract, your scope of work, entity documentation, that third-party contact info that we mentioned, title and insurance. And then we'll need a couple more pieces for the guarantor. It'll be a social security number, marital status, things like that. Social security number is only used for a background check. We are never going to do a hard pull. It will never show up as an inquiry, and the loan will not show up on your credit report either. So if you're planning to buy your own home, we'll have zero effect on your DTI.
Very good. You guys hear all this? This is powerful.
Yep, for sure. So once we submit the application, obviously once it's all filled out, myself or any experienced manager that you might be assigned to other than myself would be pushing it to processing. At that point is when we're going to send out our request or our order for title, insurance, and inspection. The inspection piece, it's really basic. Don't be intimidated by that. We can do a virtual inspection. Someone will just reach out to you, they'll send you a link, and you'll do 10 to 15 minutes of a walkthrough of the property. They'll kind of screenshot the pictures that we need for our inspection, send it back to us. We do offer a traditional inspection as well, where you can have someone actually come out and visit the property. Usually LinkedIn's the lead time to get that back, but it's an option if you want kind of a deeper look into it.
I want to call something really important out. So if you are buying off market and you are dealing with a occupied property, and there is a chance that you are only going to get one walkthrough. If you are a standard borrower, get Kiavi on board ahead of time, because that could be your only chance to get through the property. If you get more than one walkthrough, you'll walk it yourself with your GC and then have to send an inspector back before closing, correct?
Yep.
Now, big, huge bonus. If you guys are on the pro program, you get to omit. There is an inspection, but it can be after closing.
Yes.
So we do all of our inspections post-close, meaning I only have to get through the property one time for my GC prior to closing.
Yeah, we'll just request, if you qualify for the pro, we'll request pictures. So if you got that one walkthrough and you can't get access again, take all your pictures at that point. You just upload them to the application, and we can move forward with that info.
Yeah,
so
exactly.
That's the biggest perk with, as far as the process goes with the pro membership, is that post-close inspection.
Yes, that's a huge one. So you get through your third parties, title works in process, title and Kiavi work together.
We do. Yeah. So we have a partnership with Stewart Title. They're nationwide. So, as mentioned, if you don't have a relationship with an already existing title company, maybe in your area, we offer them. So you can choose to use Stewart Title. They know our process. They know everything that we need in and out. I think we've been partnered with them, I want to say 2.5 years or so.
Nice.
So they know exactly what we need. So
if you guys were following along week after week on our live stream, last week we had Empora Title on how to read a HUD statement. Empora has been our title company about the same time Kiavi's been hard money. They work seamlessly.
Empora is great. I've worked with them before too.
Yeah. So the idea here is that we're building a team. We are building people who understand our process. We understand theirs. And we're just doing the same work over and over and over. We're not reinventing the wheel. So the fact that my title and my hard money lender work so seamlessly together takes a lot of burden off me as the investor. That is key, that all my third parties know how to work together.
For sure. And that's a thing for us too. We want it to be as seamless and as easy as possible, especially with new investors. If you're taking a dive into it the first time, you're already nervous about putting all this money up and doing your first investment. So, we're trying to make it as easy and as less nerve-wracking as we can for you
guys. I would be amiss if I missed this plug. If this is your first deal ever, you're trying to buy your first deal, we have a 90-day challenge to buy your first rental. And I will help you step by step through this process. Tyler partners with all of our students. And so if you're like, holy crap, this is way too much to handle, we got you. Join the challenge.
Yep, for sure. I've talked to a lot of students so far.
Yeah.
It's been good.
Tyler, I'm going to open up, share my screen for a second. What I think is the most powerful component that you guys put out. Talk to me for a second about, while I pull this up, talk to me about your tech.
Yes. So as I mentioned, the platform and everything is extremely user-friendly. You can get everything you need on your own. So step by step, you'll create your account and you'll have your whole portal set up for you to price out deals, get your pre-qualification letter, get a loan summary, submit the application like you're seeing there, submit your draws once you fund and everything like that. So it's, like I said, you don't have to talk to anybody if you so choose that you don't feel like talking on the phone or anything like that. We can do everything right on the portal. We take it from there on our end, and you'll see all these updates as you go through the process of your application too.
So literally there's a little timeline: submit initial application, conditional approval. It is not that you're dummies, but it's dummy proof. You can't mess this up, right? It tells you exactly what to do next, exactly where you are in the process. Tells you the status of each of your checklist items. So you click into each of these, there's drop downs. Obviously this is a deal that we own. You can get, people ask all the time about a pre-approval. So how would someone get a pre-approval if they're going to make an offer?
Yeah. So when you log into your portal initially, it'll kind of walk you through step by step. So you put in the name of your entity and the individual guarantor. Once that's complete, it'll ask you for a property address. Punch in the property address, then it'll bring you to a calculator. It's going to have like an estimated credit score, the state you're investing in, or location of the property. It'll ask you for purchase price, rehab cost, and after repair value. Just punch the numbers in. It'll populate a purchase loan amount for you as well, which will go over the terms and what we can do up to there. Then once that's complete, it'll ask you for your current address and date of birth. That's when it'll do the soft pull on your credit score. As long as you got a 660 credit score, the pre-qual, it'll look similar to a page like this that Jessie's on. It'll say review your loan details. In the PDF, actually in the right here, the additional one will be download your pre-qualification letter. You can get that right off the website, submit your offer from there.
Yep. So I'm past that on this page, right?
It looks very similar to this. Yeah. This is when we're cleared to close and everything, but on the right there, it'll have loan summary and pre-qualification letter that you can download.
Yep, exactly right. And this is here forever. So you can go back, and I have opened up all my backend systems to everyone. I have no secrets. But if I go to my Kiavi and I look at all the, these are our active loans with them. And then we have all loans. So I have a running history of every project that I have done, the status, what I paid, if it's closed off, loan numbers. It just goes and goes and goes. And I can go back anytime. Look at this. What's he yelling about?
He's saying bye outside. A mailman just went by.
I can look at my documents, all of, anything that's recorded, anything that you have your evidence of insurance, you have it all right here. So while the terms, I would say terms are competitive with other hard money lenders, process is similar, timelines are similar. What they don't have that you guys have is the tech behind it all.
For sure. Yeah. Our tech, we really pride ourselves on that. On top of, it's huge for customer service because it gives you everything at your fingertips, especially after hours or over the weekend. I personally like to be available at least via text message over the weekend. Obviously I got the,
you guys heard it here first. Text them at 2 a.m.
Yeah, right. My free time is valuable to me, but we still try to be as available. But if we're not, you just go right on the website and get what you need there. So it makes either way you can get an answer. If you can't get in touch with us, go right in your dashboard and you see exactly where you're at or get exactly what you need.
Exactly right. So we're talking about hard money, which is on the purchase side. I could bring you back on for your DSCR products. We won't go into today, but I was on the phone with my rep, Pat, yesterday for half an hour on a DSCR product that he took the call and spent the time with me. I understand the process now. So I am, I can be fully self-sufficient in the portal. You really get it all.
Yep, for sure.
Okay. Well, what everyone I know is asking is, how do I qualify? What are the terms? So we're saying 660 minimum credit.
That's the minimum.
Do you need any purchases, or could you be a brand new investor?
You can be a brand new investor, especially for hard money. You could technically be a first-time home buyer when it comes to a fix and flip.
Okay.
We're not going to require any prior experience or prior home ownership with that product. Okay.
Great. What else would someone need in order to qualify with you guys?
Yeah. So have an entity set up. Make sure if you have an existing entity that's in good standing with the state. So pay your dues if they haven't been paid. We will need an EIN number for tax purposes. Beyond that, most states require an operating agreement or bylaws if you have a corporation. So make sure to have those ready. Make sure to list all your ownership percentages, all the members within the entity.
You guys, if you're in the 90-day challenge, you have all of this handed to you on a silver platter, because this week we're literally on operating agreement. So you need to have it. Your lender needs it. Perfect.
Yep. We'll need that. I mean, we're always looking at your formation document to kind of see who's on there, but the operating agreement is really going to confirm the percentages of ownership if there are multiple members or if it's just a single member. That's really about it as far as qualifying goes. Beyond that, it's really all going to be based on the property, making sure title comes back clean. So when it really boils down to the property, we're making sure the value is good as far as after repair value goes. We want to make sure you're at least at a break-even point, but ideally you're making a profit on these flips.
And how is Kiavi looking at an ARV number?
Yeah, so it's all based on sales comparables in the area. The typical timeline and radius that we're looking at, ideally, are sales within the last 6 months and within a mile radius of the subject property that we're financing.
It's pretty generous.
Yeah. So a lot of what I've seen in the past, a lot of realtors get hung up on price per square foot when it comes to comparables.
Okay.
That's not as huge of a factor when it comes to how we are looking at comps. Obviously, it's in the valuation report and that's acknowledged, but don't put as much weight on it when you're looking at your comps. Look at bedroom counts, bathroom counts, square footage of the property. We want those to be as comparable and as similar as possible to, the subject property.
And something that I want to call out is that if private money is powerful, we have tons of live streams, tons of training on how to use private money. What you get using hard money is this additional check and balance. So if I think ARV is 200, I'm underwriting this at 200. I have an expert team of analysts coming in to check my work, right? You don't get that in the private money world. So if you are a little unsure and you want a second set of eyes, because Tyler, who are you guys really out to protect by doing this? Yourselves, the bank.
Yeah.
So if Kiavi says it's a good investment, protecting themselves, I think it's pretty safe to say you're going to be, a solid investment.
100%. And our valuation team, as well as our construction team, I mean, they've been doing this for years. Our whole valuation team are licensed appraisers throughout the country.
Are they? I
So
didn't know that.
they are very, very knowledgeable in what they're doing, a ton of experience. And we obviously have a ton of data around all the deals that we've done.
Yeah.
So if something doesn't work, we're going to let you know. We obviously leave it up to you if you want to take the chance, but our leverage is going to be reduced.
Yeah.
All that good stuff. So it's going to cost more money out of pocket to get it started, but if you're confident, we can still make it happen for sure.
So I do want to hop into kind of what some terms would look like on the hard money side, bridge loan side. You guys go ahead and start throwing your questions in the comments. We'll have a little bit of time at the end. So throw some questions in. Stay around. If you've been here this far, you're probably going to stay to the end. We have a chance for you to get $350 off of your first deal. So we're going to post a link where everything you've learned so far, you can step right into and start working with Tyler and Kiavi yourself. So $350 off, throw your questions in, stay around. Tyler, the thing everyone wants to know, what are your terms?
For sure. So our standard terms is up to 90% of purchase price. So 10% down. We're always going to finance 100% of the rehab. That's a holdback, which we can get into a little more.
Yep.
Then we're doing up to 75% ARV LTV. So that's your max total loan amount comparison to, your ARV that you're shooting for there. Like you mentioned,
throw us an example on that loan to value. So say ARV's 200.
Yeah. So it's literally just a $200,000 ARV. 75% of that is going to be your max total loan amount.
Okay.
So in that case, it would be 150,000 would be your max.
That is 150 loan amount, meaning purchase and rehab combined.
Correct. So it's your purchase loan. So taking into account, just throwing an example out, say you're purchasing the property for $100,000, your purchase loan is going to be $90,000. And then you got
90% of purchase, right?
Right. And then you got $50,000 in rehab. We're always doing 100% of that. So you're adding the 50,000 onto the 90. Total loan would be 140 in that case. So in that particular example, that works great.
So what if your total combined purchase and rehab was 160?
Right. So if it's over top of that maximum, we would just subtract that additional $10,000 from your purchase loan.
So you would still do the deal. You just need more money out of your own pocket.
Right. More skin in the game. We're always, once again, always going to make sure that we're financing 100% of the rehab, but anything additional or exceeding that max is going to be taken from the purchase loan.
Perfect. Hit us with the escrow holdback or construction holdback that you mentioned.
Yeah. So the $50,000 in that example, we held that back. That's directly with Kiavi too. So some title companies may confuse that, but you'll communicate through us. So we're reimbursing you upon completion and payment of a phase of a project or the entire project, however you want to make that work. So when you submit back for it, we're obviously getting an inspection and asking for invoices that the work has been completed and it's obviously been paid for. We're always going to ask for paid invoices. So
if you guys are qualifying for the pro, you actually do not have to submit receipts or invoices or anything. So I call for my draw. They send the inspector. 3 days later, the escrow funds hit us. And then I pay my contractor. Yeah, definitely for the pro, the draw process is a little less stringent, I guess you could say. But for our standard borrowers, it's nothing too crazy. If you got the invoices, we're still going to fill out a draw request form, and we'll just do the inspection and still get that money back to you. But might be a couple other things you got to provide. So this is just a great reminder for good systems, good processes, good bookkeeping. Because what happens if a standard borrower doesn't have the receipts? You're going to get a lot of pushback. Yeah, for sure. So we always need to verify that stuff has been paid and the amount that has been paid. Good bookkeeping is critical. Yes. You are not, even if you only are doing one, my friend, this is a business. This is not a hobby. You treat it like a business. Yep. Exactly right. Okay. So interest rates. Yes. For 10% down, we're typically at 11.99%. That'll be for a 12-month loan. If you want a longer term, it will go a little higher, typically a half a point higher for 18 or 24 months. But that's standard interest rate for 10%. It would reduce a little bit if you put more money down or, maybe the deal doesn't work as great. If we're making you put 20% down, that interest rate will decrease for you. Okay. Typically about a point. It's interest that's dispersed as well. So this is another good thing to keep in mind. With your rehab funds or your holdback, you're not charged interest on those funds until you're actually reimbursed. So that'll save you some money. Your interest payments will increase as you get reimbursements for the rehab, but initially you're just paying interest on the purchase loan for the 90% of purchase. Love it. Love it. Minimum origination. $3,500 minimum origination. $2,250 for a pro. Yep. It just went up. I had a strongly worded email to Pat. Yeah, that change happened a couple months ago. Yeah, it was $1,750 for a long time, and now we're at $2,250. $2,250 or 1.5. Yeah, it's $3,500, and we do a flat service fee of $1,500 for standard. It's $999 for the pro team. Yep. So there's some benefits, and you know what? If you're thinking, Jessie, I'm not going to do this because I'm not a pro. You guys, you gotta cut your teeth. Like, it costs more because you're a riskier borrower. Period. Right. So once you prove you got the 5, and if you're working with us, if you're really moving and grooving, this could be a matter of 6 months, So you say a year, you pay a little more than you would really kind of like in a year. you still get the deals done. You're still profitable. And now you get the bonus of being a much safer borrower, and your process relaxes a bit and your cost relax a bit.
Yep, exactly. I've had borrowers reach it in less than a year.
Yeah,
I mean,
very good.
If you kick it off and get going, I mean, we can definitely help you get there. So
yeah,
it's possible.
Well, thank you. Is there anything else? Origination, service fee?
No. Oh, there's a fee for draws. It's $199 per draw.
Yeah.
Be the only other thing I can think of right now.
All that means is don't call for 1 million draws.
Do
2 to 3, 1 to 2 to 3 a project before you start getting into, is kind of starting to affect your numbers.
For sure.
You doing 5 draws, you're paying $1,000 in fees. So, yeah.
I agree.
Okay. It looks like people don't have any questions. So, Lizzie is going to drop a link into the chat. If you guys want to work with Tyler or work with Kiavi, sign up through this link. We can also post your direct contact info, but the key here is to get that $350 off. If you want the bonus for being a first-time borrower and you work with Tyler, you have to mention that you found him through us. Cool?
Yep.
So as long as y'all can agree to that, use the link or say you came through Unlocked, and we will get you. He will get you your $350 off that first deal.
If you have trouble with the link, just let me know. I'll make sure, especially once you close your first deal, I'll make sure and everything's set up right. Just so you're aware too, the $350 is paid after you close your loan. So it's like a Visa gift card for the individual closes. So
I think when I started with you guys, you were marketing it as like a free iPad or something.
Yeah, we did like an iPad. We did there was something else too. I want to say there was maybe like headphones or something like that.
Yeah, I was pumped to get my iPad in the mail, and then it was a gift card. And I was like, dang it.
We don't strictly gift cards now. It makes it easier, I think.
Yeah. I was like, wow, this is a big promise. Well, cool. Thank you so much for your time. You guys, honestly, I consider you a part of our team and a partnership that, you make our lives as an investor very easy. And I can get out there and do a lot of business with very little overhead. And that's important to me. So thank you very much.
It as well. Of course. Yeah. Thanks for having me on. Happy to do this again too.
Yeah, we'll bring you back for DSCR.
Cool. Sounds good to me.
Thank you guys. Bye.
Bye.